conversation with the pioneer of technical analysis in India, only on ET Now.
Quick disclaimer from our end then. And before you take any position in the futures and options space, please be sure to consult with your individual financial advisors. And while you may make windfall gains, you can also land up losing if at all the markets turn adverse. We've got Dr. C.K. Narayan, who's joining us on the show right now. Dr. Narayan, thanks very much for being with us. While we saw, some bit of stability coming back into the markets, this is something that was expected. But while we are staying at these levels, is the expectation still that we're not out of the woods yet and you will see a further downside after consolidating here?
Well, I think we'll be in a bit of a consolidation for a while. We have seen a lot of activity. We have seen large gaps on the downside. We have seen big ranges. We are only into the 10th of the month, and we have seen about an 800-point range for the month already, or a 700-point range, which is like fairly par for the course as far as the monthly ranges go. So I think in terms of price, we seem to have done it. Now, of course, we'll have to carry a caveat here saying that if things really turn for the worse in Europe and we have all these exogenous events, now exogenous events will introduce a level of extra volatility which can't really be factored into any form of analysis. So I think barring those sets of exogenous events, I think we are pretty much done for the moment. So I would expect that the market would range for a while, and which is really what traders should be looking for and playing for.
All right, that's what Dr. Narayan suggests. Nifty futures, however, today have added long positions. Though the markets are just about 0.3% higher, we've got Nifty futures adding almost 21 lakh shares on the upside. Dr. Narayan, while we wouldn't be comfortable taking any new strategies, what's the update that we have on, the short strangle that we initiated yesterday? And even the bull put spread.
Yeah, we have two of them pending. One is the short strangle and one is the bull spread using the puts. Now, both of these should actually sort of benefit from the cooling off. Of course, the bull spread is built with a slight upside bias, but I think the short strangle that we built as of yesterday will certainly benefit if all the matters were to cool off. I think we have set it up when the volatilities were in the 35% plus area. Now, I would expect that going across the next few days, the volatility should cool down to about 25%, which would see the strangle shrink in value. So I don't see any reason to put on fresh trades because there is no clarity as to what the market will do, and if it is going to remain in a range, then I think the short strangle would be the best strategy to have. And I think the bull put spread is trading at about 70 rupees, so we are about 20-25 rupees in the plus. Like I said yesterday, if the pricing were to drop to where we are making, let's say about 40 rupees on the spread, that's where we will look to take the thing off. So no fresh strategies, just hold on to both of them.
All right, no fresh strategies, just hold on to both of those strategies that we initiated. That's the bull put spread as well as the short strangle that we'd made out earlier on.